Anupam Jindal, Group CFO at Sterlite Technologies, on the show with us right now. Anupam, hi, morning. Tell us about the special provision that's been made this quarter in regards to the excise matter. Was just going through the numbers and wanted this detail. And how has it impacted your profits?
Sure. So this is this provision we have made under the scheme which has been announced by the government for resolution of the old legacy matters, particularly in excise and service tax. And we had one matter outstanding with about 188 crore of total liability. And we found this as a good opportunity for us to settle as one-time settlement under the provisions of this scheme. And the overall amount came to be about 51 crore of provision to be taken, and we have taken this as a one-time hit in our P&L in Q3. And with this, the qualification which was attached to that liability has also gone. So it's a very positive step, and we are very happy that this matter is now behind us. We are expecting a formal closure from the department, which is expected in this month itself, in January. But we are very, very hopeful that this matter is behind us with this closure.
Fair enough. What about pricing trends in the OF and OCF segments in recent times? Could you also talk to us a little bit about that, if there's been any improvement and how it's going to impact performance going forward?
Sure. So I think the pricing wise, I'll just give you some context that prices had started coming down significantly over last 1 year. We are seeing globally prices to be stabilizing at the bottom level. But within that, we are seeing two spectrum of prices. One is that $4 kind of thing which comes out in the market. But still we are holding on, price range of about $6, which is a mix of the kind of products we are supplying and the position we have with our customers at a global level. So we are still able to hold on to upper end of the price band, and therefore we are still not impacted as much as a lot of other players have got impacted. In fact, in this business, we are still holding on to 22% EBITDA margin, which is not a significant dip from 24-25% margin which we used to command earlier. So I think we have withheld this impact of the price erosion in the market quite well because of the positioning we had as an integrated manufacturer in the industry. Very few companies have that kind of strength globally, and this has really helped us. Going forward, we are looking at demand to move up maybe 3 quarters from now, 2 quarters from now, basis the 5G implementation, which has started happening at a much faster pace globally. And with that, we are also looking at some price uptick coming in. Internally, we have also worked on the cost optimization, and this combination of things are helping us maintain the margin at substantial high level at 22%. Maybe in 1 year from now, we may still have better margin basis all these three things which I said, that market from volume perspective may improve, realization may also improve, and our cost rationalization drive which we are doing will continue to do better. And fourth thing I can add is that new products which we continue to develop generally command better pricing, and that is also ongoing. So I think I'm quite hopeful on maintaining the margin in this business as well as some uptick maybe 6 months from now.
Also, Anupam, wanted to understand how much of the working capital cycle has improved, because there was a significant receivable in the quarter that was over 100 days old. Wanted to understand who was it from, how much was the quantum, and how much is it still pending, and when will the pending balance really come in?
Yeah, so I think we are seeing good movement happening in our receivables. Overall number of days still continue to be about 90 to 100 days. But what we have seen, one big chunk of collection coming in from BSNL, about 130 crore plus we received in Q3 itself, which was a good respite to us. Which was in the product business, unfortunately. But we are still having about 160 crores. So almost 40% of the money has come. Another 60% of the money is still due, which we are expecting in Q4 or maybe Q1 of the next year. So I think overall, other than this BSNL due, which became a bit overdue, we are not seeing any constraint or challenges. Liquidity continues to be quite good at our customer end. We are not seeing any kind of challenge in receivables.
Is the mothballing of certain capacities and weaker players exiting the business creating an opportunity for you? And if so, how much price stability would that create?
I think overall, the mothballing of capacities are formally yet to be seen, but we see stress in a lot of competitions. Capacities and a lot of layoffs and a lot of capacity shutdowns are already happening, not at a significant level to start with, but if that continues for some time because of the kind of realization they are operating in and the kind of cost structure they are operating in, they may not be viable. The impact of that on the price is yet to be seen, but as I said that in 2 quarters time from here on, fundamentally the industry will also have some uptick because the demand is going to come back, and this mothballing of plants may also help some price recovery in next 6 months or so.
What about the growth and revenue share in the services segment? Is that likely to see a pickup? What are your ambitions over there?
I think the services business is really transforming the company as a true data innovator or true data network company. We have been able to expand this business from almost like 350 CR in the revenue in 2016 financial year to about 2600 crore of run rate today. And last year we did about 1800 crore in this business, so almost like 60% growth year on year. And next year again in this business we are looking at growth of more than 40%. So this is really providing us a great growth driver, enlarging the canvas in which we are operating against the fiber and fiber cable, which was limited to about $8 to $10 billion, which we continue to still dominate at global level. But the service business is actually helping us attract a new customer, new geography at a larger share of wallet. And this business is going to further grow. In this business, we have also increased the order book recently with the acquisition of T-Fiber order, which was about 1100 crore. Part of overall 1800 crore of project, 700 crore order will come in next 9 months or so. So this is a large order, again giving good confidence. In addition to that, we continue to see many such engagements with both large enterprise and public as well as private segment, where we are hopeful of many such wins in Q4 and Q1 going forward. Hopefully, we'll start the next financial year in March with a substantially higher order book from here on as well. We are sitting at 8,500 crore of order book as on 31st December, which is higher than 8,100 reported at the end of Q2. So that's again a positive upside seen as a lead indicator of our performance. We communicated that H2 will be muted, Q3 behind us, Q4 is looking better than what we have delivered in Q3. And FY21, we are looking at overall revenue growth of more than 25%. So I think these are some of the things which are helping us overcome the kind of challenges we have seen. We are looking at the worst is behind us, and the things are moving up going forward, both at revenue and profitability level.
Okay. How critical is the ramp up of 5G capex to Sterlite's growth and products? And do you see pricing pressure pick up if indeed 5G were to slow down? And also, how much of the FY21 and 22 estimates are really linked to significant 5G ramp up? What happens if this is delayed? I mean, wanted to understand if you have really a backup plan in place.
Sure. So I think this overall 5G definitely has got delayed in the past, and in spite of that, we have grown our revenue significantly over the last few years. Even in the current year, we are looking at single or early double-digit growth in revenue on full-year basis. As far as any potential delay in 5G, one, we don't really see that today because it's already got delayed significantly, and we are seeing rather faster uptick in 5G at global level. In terms of any potential impact of the delay further, if at all it happens, I think we are becoming more relevant to the large four segments. One is telecom operator who are more dependent on 5G, but there are cloud entities where we are becoming more relevant, which is data-driven growth. So they need to set up more data centers, they need to connect those data centers, and we are becoming more and more relevant in that by acquiring some of the companies like IDS in UK, which is in-house data center design company and implementation agency. So that is also allowing us to get a good foot in the door for those larger opportunities than large enterprises such as defense, and these are not dependent on 5G. So this is another thing. And citizen network, which is like BharatNet, Mahanet is one project we are already doing. We have Telangana project, which is already acquired by us, and then many such opportunities. So apart from 5G, which is only telco limited, we have 3 other segments which are really quite large and can open up a lot of opportunity both in India and outside India for us.
All right. Thanks so much for joining us and talking us through all the latest there currently, Anupam. Always a pleasure.
Thank you.